your take, Vinod, on how you would look at the Nifty today, or in the near term?
Yeah. My sense is that yesterday the kind of patterns that the Nifty has made, complete engulfing pattern. Also the fact that neckline was broken. Now this would trigger some more sell calls in the market, which will ensure that people who are not feeling jittery at this point of time will start feeling jittery. I totally agree with Devin that it's fundamentally a good market to buy into. Weakness should be an opportunity to buy. But definitely, as I spoken earlier with you on the show, we have seen a 61.8% correction twice in the rally from 2003 to 2008, and still it is a bull market. So this correction is nowhere near that. So if you are willing to be fully, let's say, deeply entrenched in the market, you should conserve your resources further, because the market will still give you more attractive places. Okay. However, if you're fully invested, it might be time to at least protect your portfolio to the extent of the cash that you'd want to generate.
Okay, you're certainly bearish in the sense that you're only buying puts all the way. I think there's only in one stock in which you're buying a call. So let's get to your strategies. Asian Paints, sell that one as well, buy the put.
Yes, I'm coming from a house which needs to protect the capital first. So if you are an Asian Paints investor and there are reasons to be invested, still continue to invested, you better buy a put as well. So I'm suggesting constructing a bear spread here, where you buy the 700 put and sell the 680 put. You will buy 13. You will expend 13 rupees in buys, and 7 rupees will be the amount that you'll get. Net cost will come to around 6, and possible money to be made in this bear strategy is around 14 rupees.
Okay, so that's the word coming in on Asian Paints.
Vinod, let me quickly go through your strategies. You have three more stocks in the Nifty that you are selling puts off. Punjab National Bank, Kotak Bank and DLF.
Yeah, I am buying puts there.
Yes.
So my suggestion, in fact, companies which have done well, for instance, Kotak has done pretty well. But if you're holding this, you better buy the 1280 put at around 31, stop loss at 20, and the target is around 55 in this. In case of PNB, it has been beaten down. Black and blue, yesterday it fell 4%. Open interest still added. So I'm still suggesting to buy the 130 put to protect your portfolio of PNB. Buy the 130 put at 4.5, stop loss can be at 3, and possibly it will generate you 8 rupees. In case of DLF, the stock has been beaten down, it continues to fall, and therefore we still feel there is more, let's say, headroom in the legroom from this stock to fall. I am suggesting buying the 105 put at around 2.75, keep a stop loss at 1, and a possible target of maybe 6 rupees in the current settlement.
Okay, and you have a couple of more strategies on names like Dish TV and on REC?
REC, it has fallen and still continue to, if you're holding it, you better buy a put here. So I'm suggesting buying the 270 put at around 4, stop loss at 2, and a target of 8. And in case of Dish TV, this is a lone stock which I have as a buy, but that too I'm willing to buy at a lower price. It closed at 102. I'm suggesting buying the 105 call at around 2 rupees, although the closing price of the premium was around 2.9. You wait for the dip, and if you do get it, still keep a stop loss at 1 and a possible target of 5 rupees in the current settlement.
All right, Vinod, thank you very much for joining us. It's going to be a tense day, and these strategies, I'm sure, would be helpful.